Hello everyone, welcome back to my channel. What according to you is a better investment? A flagship project like Phoenix Palladium Mall in Mumbai or a residential property in Bengaluru which was built and sold off by a builder? If your gut said the mall, then congratulations, you also exactly think like this company does. And if commercial real estate excites you, then this company is something you don't want to miss out on. The company is Phoenix Mills Limited. By the end of this video, you are going to know about what the company does, what is management actually targeting, and we will see what is the technical chart actually telling. So let's dig in. Phoenix Mills is India's largest retail-led mixed-use real estate developer. What does this mean? It means that the company owns and operates malls, offices, residences and hotels. Rather than building and selling real estate pieces, the company recurs its rental income year after year. The company has presence in mostly Tier 1 and Tier 2 cities, and we'll see in a second that how this map is about to get bigger. As we can see, both revenue and EBITDA are at an all-time high, where revenue grew 21% year on year and EBITDA grew 34% year on year. Also, the margins have expanded and adjusted profit has grown 50% year on year. Now, considering the rising demand, the company has planned its expansion across all its segments. That includes retail space, office space, hospitality and residencies as well. As you can see in the graph, there is a rising trend in the rentals, which means this becomes a massive tailwind for the company. As we can see through the graphs, the company has scaled up its leasable portfolio, and we can also see the consumption is at an all-time high and in a rising trend. Company has a first mover advantage of acquiring properties in prime locations of Tier 1 cities such as Mumbai, Bengaluru and Pune. Along with that comes operational expertise that has developed over the years of operating such real estates, and this itself becomes a moat. Although the debt has risen in FY26, but it is still at a manageable level of 0.4 debt to equity ratio. With addition of newer offices and malls in the portfolio, the ROCE of the company, which is around 12%, is expected to rise to 15% in FY28. According to the cash flow statement, we can conclude that the company has been reinvesting its maximum amount of earnings into its capex expansions. And we can also see that cash flow from operations to operating profit ratio is around 100%, which means the cash flows are healthy. Before we proceed further, I would like to tell you that the video is for educational purposes only. It is not meant for any buy or sell recommendation. The chart and technical charts used are for illustrative purposes only. I am not a SEBI registered research advisor. Consult your financial advisor before taking any step in the markets. When we go through the shareholding pattern, we can observe that the institutions have held this company over a decade, and FII specifically have stayed put through their investment in this company, even when we see that they are selling in broader markets. Now, when we go through the peers of this company, we observe that Phoenix Mills is on the third position when it comes to the market cap. But when we see that it is already at a higher PE, then there is a very less possibility of a PE expansion in its entirety happening. although the earnings can expand in future, considering the aggressive capex plans of the company. Now, before we move on to the technical analysis of the company, if you guys have liked my content, then I request you to like it, share my content, and subscribe to my channel, as it supports me and motivates me. For the technical analysis, we are going to analyze the long-term trends of Phoenix Mills, key resistance and support levels, and we are going to discuss any significant chart pattern if there is any. When we see the long-term trend of Phoenix Mills, we observe that it is in a long-term bullish trend since 2020, and the price of the Phoenix Mills has come out of consolidation of 1 year. As we can see, Phoenix Mills has given a breakout of a significant chart pattern called cup and handle, and it is trading above the psychological levels of 2000. The chart of Phoenix Mills has broken above all-time high, and the 1860 levels, as we can see, can act as a key support zone. So that was Phoenix Mills for us. Thank you once again for giving your valuable time. Do subscribe to my channel if you want more such insights.